When one index like the Dow trades off, it might be a little bit worrisome. However, notice what the Dow did today. When it traded off, it came back up and closed just above the T-line. So even on a weak day, there's still some signs that there isn't any massive selling going on in this market. However, when you add the analysis of what went on in the NASDAQ, which traded positive today, you only can come up with one assumption. There was no major change of investor sentiment in this market trend. So as long as there's nothing where we're showing the sellers have taken over all the markets, meaning the NASDAQ, the S&P, and the Dow, that just tells us we're still in a slow, steady uptrend, which still makes this market very sector/stock specific. And knowing what to expect after specific price patterns allows investors to take advantage of good stock trades as well as good option trades. For example, we've been following SCTY, Solar City, for a while. Notice the big fry pan bottom. And notice what happened yesterday. A doji after a gap up after a bullish harami, staying above the T-line, keeping the trajectory of the fry pan bottom in place, and then a doji right at the breakout level, which makes this trading very simple. If it opens positive, that tells us we're breaking out into new territory. The fact that we were buying calls as well as a stock on this day gave us some very simple trading strategies. If it opened lower and started trading back below the T-line, you closed out the position. If it opened positive, we had the prospects of a very big price move. One, because we had a doji sandwich, and number two, if it opens positive after a doji, it's usually going to move in that direction, how they open it. And patterns have usually a high probable result. Even on situations where you see a whipsaw action at the end of a fry pan bottom, the result is that a lot of people are either buying or selling as the enthusiasm builds up, which also creates a very high probability profitable trade situation. Knowing what the signals and patterns represent, because they've reoccurred for hundreds of years, allows investors to get into the right positions at the right time and expect some big price moves. For example, our recommendation on SEM is because we had a very strong price move, then it pulled back, and then we had a flutter kicker signal, which is a very strong bullish signal, and then it broke out through this level. After a couple of days of indecision, it's still a high probability situation. We can see a strong price move that breaks out through this level, putting us into wave 3 of a J-hook pattern, which means our next move potential is the same magnitude as this move. Knowing what should happen based upon how investors have invested for hundreds of years allows, as a candlestick investor, to be in the right place at the right time. That'll be it. We'll see you in the chat rooms.